Hey, what's up, stock compounders? Brad here. So today I'm going to be talking about stocks that returned 1,000 to 1 in recent history. Okay, I made a Twitter post today. Why are investors so preoccupied with 100 baggers when there are 1,000 baggers to study? I want the book that explores 1,000 to 1 in the stock market. And of course, I was referencing this book by Thomas Phelps, 100 to 1 in the stock market, where he looks at 100 baggers between the years of 1932 and 1971, where you could have bought in that period. And in 1971, you would have had a 100x return on that stock. There were 365 results, stocks that returned 100 to 1 over that period. Now, of course, Chris Meyer, who I just did a video on yesterday about his current portfolio holdings, wrote the follow-up to 100 to 1 in the stock market, 100 baggers. And he was looking over a period of 1965 to 2014, so 50-year period. He found also 365 100 baggers in that period. So, in 365 is a lot of stocks to dig into. Okay, it's great if you want to, find patterns or correlations to, maybe help you get better at selecting 100 baggers. But personally, I think for an individual investor, there's probably more value in finding maybe 5 to 10 thousand baggers and really going deep on those, trying to understand the DNA of that business, the kind of critical decisions or factors that resulted in that company being 1,000 bagger. I just want to show a few comments that I got in response to this tweet today that really inspired this video and the research that went behind this video. In the book 100 Baggers, the author identified about 300 stocks, 365 stocks to be exact, that were 100 baggers. Good luck finding 5 1,000 baggers, okay? Challenge accepted. Tell me one, buddy, LOL. I'll give you 8 just within the last 35 years, okay? And this was also inspired by, hearing about Naspers, all right? This small newspaper company in South Africa that, took a stake in Tencent back in 2001. It was like I think it was like a 35 or 45 million dollar stake in Tencent before Tencent went public. And that stake, that small stake back in 2001, has grown 8,000 times over the last 20 years, okay? So Tencent was an 8,000 bagger for Naspers. Now, us public investors, we couldn't have gotten that deal. I think Tencent went public in like 2004. It's like an 800 bagger since 2004. So, still pretty solid. But it got me really interested, 10-cent, 8,000 bagger in 20 years. What could we have done as, public stock investors in the U.S. over the last 3 or 4 decades? So that's what I set out to do. And I was able to find 8 1,000 baggers where you could have bought within the last 35 years. And that position today would have been over 1,000x gain. Okay, so we can see here how much the gain would have been if we had bought kind of in this month and year. And I've sorted by the magnitude of the baggerdom. Okay, Monster Beverage. Holy smokes, guys! I mean, this is just 25 years. 6,582 bagger. That's approaching what Tencent has done. Very impressive. So I've also listed the compound annual growth rate over that period, just so we can kind of compare apples to apples, because there's different starting points of when we could have bought these stocks to get 1,000x return. So this allows us to compare apples to apples. And then over the last decade, what has the compound annual growth rate been? And this just gives us a sense, is this incredible performance continuing into the most recent decade, or has there been a drop off in stock price appreciation? So you can see, let's just go through them real quick here. Monster Beverage, 41% CAGR, the highest of the 8 companies in this short study here. Over the last decade, it's been no slouch. Okay, 22% CAGR is still very strong. Amazon obviously needs no introduction. Over 24 years, it's been almost a 2,000 bagger. 37% CAGR, still going very strong over the last decade. Very impressive for Amazon. At this clip, guys, 37% CAGR over 24 years, 33% CAGR over the last decade. This is basically doubling our money every 2 years, okay, which is incredible. Now, 26% over the last decade for Microsoft. That is exactly a 10x over the last 10 years, which is awesome. That's fantastic performance for Microsoft. Apple, obviously, the FANG is well represented here. Amazon, Microsoft, Apple. Okay, those are some FANG stocks for you guys. What's interesting about Apple, it's actually accelerated over the last decade in terms of performance. Obviously, we've got the App Store, pretty big developments over the last decade for Apple. Global domination for iPhones, and the App Store has really driven the story for Apple. Adobe, okay, 23% over, what is this, 34 years, and 33% over the last decade. Still going very strong, kind of neck and neck with Amazon over the last decade in terms of stock price appreciation. Jack Henry and Associates, okay, over 30 years, over 1,000 bagger. Okay, so we've got that magic 26% CAGR, which is 1,000x over 30 years. Down a bit over the last decade, still pretty strong at 18%. Now, I was reading a little bit about Jack Henry and Associates. Seems to be, in the fintech space. But it's only a 12 billion market cap as of today, so may still have room to run. I know fintech is getting pretty competitive. There's a lot of innovative businesses in that space, so I definitely want to understand what is their current competitive advantage at Jack Henry and Associates. We've got Oracle over 34 years, which 23% CAGR, 10% over the last decade. So definitely a drop off from Oracle in recent years. Definitely makes me less compelled to dig into Oracle. And then finally, Home Depot. Okay, over 1,000x, 1162, 22% CAGR, and slightly higher over the last decade, 24%. So obviously, most of these are very large businesses. But again, you've got Jack Henry and Associates, and you've got Monster Beverage, I think is around 50 billion market cap, something like that. So, not enormous. Might still be worth looking at, but this Jack Henry, this one is intriguing me. But anyway, guys, I just wanted to show you what I found in terms of 1,000 baggers in the U.S. Since 1985. Okay, I was using this tool called the Portfolio Visualizer. which is an awesome free tool. And the data goes back to about 1985 for these individual businesses. You know, if I would have extended that just a few years before 1985, of course, Berkshire Hathaway would have been included in this list. And I'm sure there are others that go back before 1985 and still would have returned that 1000x being held today. But I just thought this was kind of an interesting experiment. If you guys can think of any more businesses that would fit this 1,000 bagger framework since 1985, please let me know in the comments. I'm sure I have not found them all. But yeah, it's an interesting study, and it would be fun if any of you are interested in doing deep dives into any of these. I know a number of you have probably done a deep dive into Amazon. That keeps coming up. Obviously, from Nick Sleep, that was kind of the big home run for Nomad Investment Partnership. But it'd be fun to collaborate with some of you guys to really do deep dives on these incredible businesses over the last 3 or 4 decades. Yeah, so I think that's all I've got for today, guys. Let me know again if you know of any 1000 baggers that, you know, could have been bought as a public company and, you know, could still be owned today and have produced that 1000x in the portfolio. I think it's worthwhile narrowing down the field a little bit from this 365 100 baggers down to, you know, a dozen or so 1,000 baggers to really study these particular businesses. So anyway, guys, just wanted to share that off the coattails of the video I made yesterday. I've just been doing some thinking around this. And again, let me know your feedback. Let me know your comments. And if you have anything to add to the list, I would love to build this list out to maybe, you know, 10 or 12 or even 15 companies that fit this framework. And they could be overseas as well. I'm not trying to exclude companies outside the U.S., but this was really what the tool that I was using allowed me to search for. So thanks for watching today, guys. I will see you all in the next video. Take care.